Hello and welcome to myfinanceteacher.org. The main topic of this video is to have a look at a 25-week return on silver, which actually has been requested in some of the comments on my YouTube channel. By the way, subscribe to the channel if you haven't. And of course, don't forget to hit that like button. But before we have a look at that 25-week return on silver, let's just have a look at a quick overview of gold, silver itself, and a little bit about crypto. Why not? So as you see, gold is doing particularly well. A few days ago, I thought gold might actually just reach 1,830, and that's where I was expecting gold to possibly start to turn around and go into the declining phase of both the short-term daily cycle and the intermediate cycle. But so far, gold is doing well, although I do think it's overheated at the moment. It's a bit too hot, so you probably want to have your stop losses relatively tight on gold. So caution is advised at the moment. As you see, the short-term daily cycle is on day 48. That's already pretty late to jump into the deep side of a trade on gold. And the intermediate cycle is on day 125. That's also most likely far past the midpoint. So again, I think this intermediate cycle is likely to give us a top soon, and a decline might actually last for a couple of months. Looking at the 14-day RSI, that's into 78. That's already pretty deep into overbought territory. Again, advising that caution is important right now. Next, let's have a look at silver. It's performing exceptionally well over the last few days. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. It does look a little bit parabolic though, so I think it's really getting hot. And you really need to get careful with your relatively tight stop losses. You see, RSI is deep into overbought territory. It's at 84 at the moment, and actually yesterday it was even at 88. Looking back at history, when this bear market in precious metals finished at the end of 2015, both gold and silver gave us a nice rally from somewhere around $13.50 all the way up to $22. Which was nearly 55% rally, so that was a very significant increase in silver price. And at that time, RSI, 14-day RSI, actually gave a reading of 86 at one moment, and at one other time it gave us a reading of 82. So 82 to 86 is already pretty high for the 14-day RSI. That actually coincided to two noticeable peaks in silver price. And what do you know, as I mentioned yesterday, the 14-day RSI reached into 88. It just shows you how hot silver is at the moment. Do you want to touch it? Only if you have good protection in the form of those tight stop losses. Next, let's have a look at that 25-week return. We've looked at gold last time. Let's have a quick look at it again. Blue line is the gold price. And the red line is the return on gold price you would have had if you held gold for 25 weeks. We see that the peak in this indicator often coincides with the peaks in the intermediate cycles in gold. And you see it's generally a good idea to sell at least some of your precious metals positions when the 25-week return on gold is close to or above 15%. And it's generally a good idea to increase your positions in gold when this 25-week return is below 5%, especially if it's below zero. At the moment, this 25-week return is at 18, so it's already above that approximate threshold of 15, which means if you are not selling gold at the moment, again, as I mentioned, stop losses are really advised. Silver. The red line is the 25-week return on silver. As you see, it's a little more volatile compared to gold. While this indicator for gold ranges from -16 to plus 25% return, for silver, this indicator ranges from -28% to positive 46%. So it might be a little bit more tricky to pick the bottoms, as the bottoms can fall as deep as negative 28%, but still useful to look at this indicator. As you see, it's generally nice to pick up some silver when the 25-week return is either close to negative 10% or below that negative 10%. And on the other hand, you see that over here during 2017 and 2018, it was possibly nice to sell some silver when this 25-week return was relatively close to positive 10%. Even below 10%, at about 8% return, it was already a good idea to sell some silver. But that's for 2017-18. During some other times, it would have been much better to wait for this indicator to break above 20%. As it happened in 2016, it actually reached above 40%, and it broke above 20% in 2019. That would have also been a nice time to sell some silver at these late 2019 tops. And again, what do you know? At the moment, this indicator is above 20%. The indicator is now at 26%. The scale for this indicator is on the left-hand side. The scale for silver price is on the right-hand side. So generally, whenever this 25-week return is above 20%, you probably want to lighten up on your positions, and it's now at 26. Yes, it can still continue higher, possibly break above 30%, but I don't think it's extremely likely given that the cycle is not that young. So what I'm personally doing is I'm not selling out of my position. I'm still holding that large 87% position. I'm very, very happy with the returns that I, as well as the members at myfinanceteacher.org, had so far since March. We're all really happy with that, and join us if you want some of the more detailed analysis. So coming back to silver, I am still holding 87% in a range of precious metals related assets, but as I said, I, together with the members at myfinanceteacher.org, we keep raising our stop losses to protect these amazing gains that we've had so far. So to sum up, at the moment, caution is advised in precious metals. Next, let's have a quick look at cryptos. Some of cryptocurrencies are doing really well as well. Like Ethereum, for example, as you see from a couple of posts at myfinanceteacher.org. We've been in Ethereum since the 18th of July, when Ethereum was just above $230 or so. And over the last few days, we've made somewhere around 13% gains on that trade. So again, if you want some more frequent analysis of a range of assets, so why not join us at myfinanceteacher.org. Coming back to Ethereum though, the Ethereum cycle is now on day 26. Usually these last for about 51 days. That's the average over the last few years. So it's near the midpoint. I think there is still some potential for Ethereum to come a little bit closer to $280. That was our target on inverse head and shoulders we've seen on a zoomed up chart. So although Ethereum is already breaking above the Bollinger Bands, RSI isn't into overbought area yet, but it's pretty close to overbought. So again, caution is advised on Ethereum. I will keep raising my stop losses and advise the members at myfinanceteacher.org about that as well. But more interestingly, while Ethereum has already made a very strong move higher, Bitcoin is possibly just about to start such a move. We see that a couple of days ago there were two nice looking green candles on Bitcoin, but the rise hasn't been as substantial, and RSI is still far from overbought. We see a red candle at the moment. Maybe a bit of a cool off will actually be an opportunity for me to enter. After all, Bollinger Bands have been pretty narrow, and that usually forecasts a violent move. If the Bitcoin cycle did actually finish over here on the 27th of June, it means another cycle has only been going on for 26 days so far. Usually these last for a couple of months on Bitcoin, so a strong move higher is still quite likely. As with 26 days so far, I would expect another 1 or 2 weeks of a general upward momentum before the cycle has to come down for that regular 2 months duration. Now zooming into the 4-hour chart, 14-period RSI on the 4-hour chart is already a little bit into overbought area, so I don't want to buy Bitcoin right now. But if we look at history during the ascending phase of that cycle, as RSI rises towards that overbought area, there is often a cool-off period, which is a buying opportunity as long as you are still early in the cycle. We see that happening again over here in late March, early April, 14-period RSI on the 4-hour chart is into overbought area. Do you want to buy here or not? That is questionable, but a bit of a cool-off is a buying opportunity while you are still early in the cycle. Again, something similar in mid to late April, that a rise in the 14-period RSI on the 4-hour chart. You could buy here, but that might be deemed a bit risky. A cool-off in RSI is a nicer buying opportunity if you are still early in that 2-month cycle. So 26 days, is it early enough for a purchase? I think an opportunity might be coming up soon. After all, since the beginning of July, Bitcoin has been giving us higher lows, and yesterday it finally gave us a higher high as well. And additionally, Bitcoin has also broken that downtrend line that it has been under all the way since the beginning of June. All of these are positive signs, and the ongoing red candle, ongoing cool-off, might actually soon give us a buying opportunity. For an update on that, join us at myfinancesteacher.org. For now, I wish you an enjoyable day and good luck in your trades.